Alrighty, this is Chris from MarketSwingTrader.com. Hey, I'm just going to go over a video of my current positions and just show you how I set up my platform with Thinkorswim and just go over some of the positions. So right now, today I opened up a position in ConocoPhillips. And the reason I did open it up is, as you can see, I ran a scan and COP came up and also HES, H-E-S came up on the scan. But as you can see, the stochastics is oversold and we're starting to run back up on the stochastics. So we came down to December's support pivot, and we held off of it and we closed above the pivot point moving average. So this came up on my watch list last night. So I went on ahead and jumped into the trade. And as you can see, I did put on a calendar trade because what I'm doing is I am selling the $70 strike January call and I am purchasing the $70 February call. So I am putting on a calendar spread on this. So I am mainly a premium seller. I do like collecting premium. So, and as you can hear my Bengal cat in the background, I do have a Bengal cat. She loves to talk sometimes, and maybe she wants to do a video with me sometime. But the reason I put it on calendar spread is because I think we can move upward. Now, and also if we look right here, as you can see, if we close up to February, in the January, the volatility, the market makers are looking for basically a $3.80 move. So I'm thinking, even if we do move up, I can make an adjustment on the 72.5 and just put on another calendar and make an adjustment. So that's what I'm looking for. And my break even on this trade, I always like putting my break evens right on the charts because that way it gives me a visual. I can see where the break evens are. Now, of course, you can go right over here to the analysis tab and look at it, but I like looking at it sometimes on the chart to see, okay, where am I on my break evens? So that is COP, and I just opened that up today, and also HES. Now HES, I'm a little bit more bullish on HES. That showed up on the scan, and as you can see, we are, I'm going to zoom in, we are above my pivot point movement averages. These are the custom indicators at MarketSwingTrader.com that you can download for the Thinkorswim platform. And as you can hear my Bengal cat in the background, it held the December support pivot, and it looks like I think we could actually move back upward to this area right here. Now, I like putting on calendars because I like collecting premium. I mean, I could just buy a call and just hope it goes up and stuff like that, but or I could have done a credit spread and collect some. And some trades I do credit spreads on. Some trades I do calendars or iron condors or broken wing butterflies. But for each trade I run through and I just mainly trade calendars and also verticals and broken wing butterflies. So I think we could get a move back up to $60. Now my break even is 54.67 and 60.66. So during February expiration, the third Friday of, the January expiration, as long as we're in between here, we can start collecting, I'm going to be collecting premium. So that is the trade. I sold the 57.5 in January and I purchased the February. Okay. And also, I'm going to do the Starbucks. Now, Starbucks, I got multiple positions on Starbucks. And I did do an adjustment, not an adjustment, I actually added to the trade because I like to scale in to calendar spreads. So we did run up and we're pretty close to my break even at 45.9, but and break even down here on the downside is 42.27. Now stochastics is running up, and I don't think we're going to move very much on this, and the reason for that, because if you look at the beta, is at 1.19, which is pretty good. Okay, now I am doing a calendar. I sold the 44 January, and I bought the 44 February. So, and yes, I'm already in the money, and also, actually, what I did was I actually sold the 44 put in here, and I bought the 44. So I have a put calendar and a call calendar in here. Now, this may look a little bit confusing, but what I'm looking to do is, if I close this up, my call calendar, I could go ahead and collect some premium on that. When I'm in a profit, I can go ahead and close that out. But what I'm looking to do, and sometimes I do this since this is February, this is pretty far out. But what I'm looking to do is try and roll that 44, try and collect some premium, roll it, take some profits, roll it, and roll that January 44 into February, and I'm going to try and see if I can't keep rolling it up into April. If it works, great. If not, then I'll just go ahead and close it out and don't worry about it. Because I like to spread out my trades sometimes, and sometimes I will roll. And also on weekly calendars, which that's a whole new video. I can get into that later. But Starbucks, I'm looking for it to stay within this range right here and start collecting premium, and then roll that 44 put into February, and then hopefully into March. If it works out, great. If not, then so be it. I'll close out the trade and manage my risk. Now also I do have RTN. Now RTN is a little bit different trade. Okay, RTN, which is Raytheon, I did a diagonal calendar on this, and the reason for that is because I think we were going to run up, but my break even on this diagonal calendar is 48.41. Now I don't have a downside for it because the diagonal actually gave me a credit of $8 per contract. So even if we go all the way down to $36, even if we go to expiration down by the low, even way down here to 38 or 34, I mean, it really doesn't matter how far we go down. I mean, I'll just let the option expire and then close out the, I'll just close out the other February, and then so be it. Now, however, my break even at expiration in January is at 48.41. Now, a diagonal, what is a diagonal? A diagonal, if we look here, I am actually in January, we have 30 days of expiration, I am selling the 48 strike, but I am purchasing in February, I am purchasing the $50 strike. Okay, so I bought the February call for a little bit of insurance, because if we go to 48, great. If we go right into expiration right at $48, I'll collect the full premium for that. Now, if we go beyond that, let's say we go to even $60, well then, you know, I've got this February call for my insurance, which is fine. So that is what a diagonal is. Now, if this was a regular calendar, then you would have the 48, and then you would have the 48 in February. That would be a regular calendar. But since and you could have even done the 49 in February and still be a diagonal. However, I just did a 50 to get a $8 credit per contract. Now, granted, $8 really is basically, that would just probably cover commissions. That's really not a huge profit. But what I'm looking for is to collect the whole premium on this January put per contract, and that's what I'm looking to collect, and then close out to February. So my Bengal cat's very talkative tonight. So maybe I'll do a video with her sometime. You guys can take a look at her. If you are familiar with Bengal cats, they love to talk. They're friendly, but they are pretty big cats. So now, last trade I'm going to go over. You want to tell everybody about this trade? Yeah, you want to talk about it? All right. So we're going to go over the SPY. Okay, now the SPY, this started out as a iron condor. Okay, but I already sold one leg, and I already took my profits in that one. So, because it was pretty maximized on the profits on that one leg, so I sold it, and I thought we were going to get a bounce. So I have a break even at 115.64. Okay, so that is right around here at expiration. I would collect I will just basically break even at 1.6. I think it's at 116. That actually, yeah. I mean, this one was way out there. Yeah, I mean, this one is way out there. I mean, I did a pretty wide iron condor, and I've already closed out the other side. And I'm just looking for a bounce. I mean, it was the 116. That was pretty way out there. Probability of expiring is at 17.8. So let's just round that up to 20%. So I got like an 80% probability of this put actually expiring worthless and collecting all the premium. So now this right here is not actually a naked put, as you can see. I actually sold the 116 and bought the 114. Yeah, we were kind of selling down, and then I kind of threw an iron condor on, and I've already made some money on the other leg, so I just kind of sold it off. And what I'm looking to do, I'm already profitable in this leg. I might hold it into expiration, I don't know, but I'm not going to let it turn in a winning trade turn into a losing trade. I'll just close it out at break even and not worry about it. So, and the way the market is so volatile now, we don't know what's going to happen. So that is the SPY that I put on. And again, I think around 126 we could have some resistance. We got up to 126, then I would definitely sell this out and just close out the position. Now overall, I've got I got 3 calendars on. I've got a diagonal and I got a vertical, a credit spread, a vertical on. Overall, my portfolio with the couple new trades I put on. Overall, right now, the required margin, I'm already up 3.5% profitable on all my trades overall. So I'm just going to keep holding and just keep collecting premium. I am a premium seller. I like being positive theta in my positions. I like selling options and collecting the premium and then purchasing farther out to for a little bit of insurance. But that's all the trades I just wanted to go by. And also, I just want to let everyone know that this is only for educational purposes. It's not an endorsement to purchase any stock or option. Make sure you consult a licensed financial advisor before investing any real money. Thank you.